Thanks, Yuan Chao. As Yuan Chao said, there are some risks that are involved with trading CFDs. So please do first check that you are aware of these risks and just some assumptions before we go into the presentation proper. This is an intermediate webinar, so there are some assumptions that I'm going to assume that you already have basic technical analysis knowledge. You already know what CFD is about, so I won't go into much detail on that. Okay. So, sorry, before that, I'm going to do a little poll, and I'm going to poll you guys to see, what are the reasons you do not trade US stocks. So, if you can kindly fill in the answers, we'll give you a few seconds, and then we will see what are the common reasons why people don't trade the US market. Okay, interestingly enough, we've got half of the audience saying that they are unfamiliar with the market, and half of people saying that they want to sleep. So again, this is very common. People want to sleep normal hours, they are unfamiliar. These are certain myths like US stocks are too expensive, and I need to open an account with a US-based broker to trade the US market. So let me just go into my next slide. Do you recognize these logos? Now you can type in your answers whether you recognize them or not. But I think to everyone, these logos are pretty, I'm sure you guys recognize them, right? Like Apple, Google, Facebook, Citi. All of you should have an inkling of what these are. So if you recognize these logos, you really know quite a lot of the blue chip companies that are listed in the US. And if you know like the Dow Jones Industrial Average, the S&P 500, NASDAQ, and Russell, you already know the 4 major indices based in the US. And you can already start an investment or a hedge using CFDs using these 4 indices. You can start with the indices to learn about the market, and then your technicals will come into play when you are looking at individual stocks. Okay, so another fallacy is that it's expensive, but as you can see, it's actually cheaper than your Singapore markets. Even the finance charges are lower. And commission for our US-based indices are actually lower than our Straits Times Index, which is our most popular index. So with now, there are so many choices, and it's lower. So this is just a promotion. Let me just go on a little bit. So why should you then trade the US? It has the largest economy in the world. It has so many stocks for you to choose from that it has the highest liquidity and the biggest blue chip companies list on the NYSE. Your NASDAQ has your largest tech companies, and I mentioned earlier on, your Apple, your Google, these are all listed on the NASDAQ. So there is so much liquidity in the US market. It's such a good opportunity for you to actually make an investment or a trade. And not just stocks. The US has the major asset class of ETFs. So if you are familiar already by like bonds, you can look at fixed income ETFs, If you are looking at commodities, but you don't want to open a futures account, you can look at commodity ETFs. And on the Phillip CFD side, you have more than 600 US equities for you to long and short. And do note that under Phillip CFD, all our US equity CFDs are direct market access. You can go to our website from time to time because this figure here may change, and I just checked it this morning. I think it was like 677 CFDs, so that's a lot for you to choose from. Going back to the so-called unfamiliarity with the US markets, right? You don't have to look necessarily at all these individual companies. Look into the fundamental analysis. Just look for companies. Start first with companies that you are already familiar with, at least in terms of brand or in terms of sectors. If you are more familiar with sectors, then just look for sector ETFs, because on our list we also have ETF CFDs. Okay, let's.
Okay, I'd like to interrupt Melissa at this point of time because Mr. CJ Ng has a question regards to DME market. He was asking whether we can elaborate a little bit further on direct market access.
Okay.
Before we proceed further. Yeah.
Direct market access. It is something that, okay, first of all, you need to understand that CFDs, or contracts for difference, is a contract between yourself and whichever broker you are buying or selling that CFD with. So you don't own the underlying share, index, or whatever product that you are trading. It's just a contract, and you're mainly interested in the price difference. So with CFD DMA, what happens is that for every order that you put in, any trade that you put in, on our side, Phillip CFD, we will put in the corresponding order into the market. So some people prefer this because it is more transparentism. They also want to take part in the market liquidity. That means they want their order to have some sort of impact in terms of volume in the actual market. So I hope that answers your question. If you want further elaboration, you might want to attend our A to Z on CFDs. That's the basic on CFDs. Or you can also go to our website under education videos. We do have a short video that explains, the difference between normal CFD, share CFD, and DMA CFD. Yeah, hope that answers Mr. Ng's question. And I'll just move on. So now we've covered all that knowledge thing, that onto the sleep part. Market trading hours. The New York and the Nasdaq exchanges, they start trading in Singapore time at 9:30 or 10:30 p.m. So my question is, do you guys really sleep that early? I think at 9:30, 10:30 p.m. we're still all awake, right? And if you look at our order submission hours, you can submit orders from 7 a.m. till 4 a.m. the next day, which means that you can put in your orders anytime when you are awake in normal working hours. You do not have to put in your orders at market hours, as in US market trading hours. To paraphrase that, you do not need to monitor the US market the whole time it is open in order to put in your orders. And now let's look at some ways on how you can start a trading plan for the US market while in Singapore time. Okay? So we always look at the big picture. You have to look at economic indicators, because these indicators have a huge impact on the market. And of course, knowing how to interpret and analyze them is important, and there is not enough time for me in this webinar to explain to you how to interpret and analyze. But the indicators, three important indicators that you really need to look out for is the Federal Open Market Committee, the non-farm payroll, and the durable goods report. These three indicators talk about the economy, how the job is doing, employment rate, and of course manufacturing. So there is analyst estimates, and just in a nutshell, if the actual indicator does better than estimate, markets are going to move up, be positive. If it's below estimate, it's going to go negative. The market's going to go negative. If it's around expected estimate, then of course that's not going to move the market. So how can you find out, where can you look for these economic indicators? I'm going to change my screen. So I'm going to show you our CFD website, and you can look at our Traders Corner. So our Traders Corner, we've got all these Trading Central TV, which you can watch, loop it. We talk about the U.S. industrial production here, and if you scroll down, we've got the U.S. market roundup. So again, if you feel that you're not very familiar, read up on this. We have also SMB, which is a prop trading firm who blogs, so you can read their trade review. They often talk about the markets, and I think this is the most important thing. Is the calendar. Okay, so you can choose U.S. economic calendar, and it tells you all these important details. Okay, and you just take note of it, so that when the minutes of the FOMC and this happens, at least you are aware of it. Okay, and you can just jot it down onto your notebook, or you can email it to yourself. Got this lovely thing over here. Of course, not everybody has Bloomberg, but if you notice, we also have Twitter. You can follow us at twitter.com/PhillipCFD. We do update as and when the announcements are made. Okay, let me go back to the presentation. Okay. And then that is for big picture. If you are looking at stocks per se, these are the keywords that you should always look out for. Improve margins in a company, government investigation, gain market share, new product. Any company that comes out with a new product, a new drug, a new something to sell. And if revenue of the company significantly better or worse than expected. So again, earnings season, that's why everybody watches US stocks during earnings season, because they are looking at that revenue forecast and the actual revenue. So if you want, another good website I recommend that you might want to look out for is stocktwits.com. That is stocktwits.com. I can type it out here in the chat box for everybody to see.
Sorry, just to interrupt, Mel. I got a question asking whether a calendar comes with the time that it's going to be released. So I'll answer that. Time is available on the calendar, and time is based on Singapore time, so you could take reference from there.
Thank you, Yuan Chao. He makes my life much easier when I'm presenting. Okay, as I was saying, so look out for these keywords in relation to the big picture. So what do you look for in the big picture? This is a chart for the SPY, which is the big picture. What is the SPY? The SPY is actually the Spider S&P 500 ETF Trust. As you can see, this is the actual S&P, and then this is the SPY. So a lot of people actually just use the SPY charts to look at the big picture because it's just easier to open up ETF charts to take a look. Some people say that because at the SPY trades like a stock, it's easier to therefore follow. Let me just go back to the SPY charts. This is the SPY chart. As you can see, you can draw lines, that it's an upward channel. So this gives you the big picture that generally the US market is positive. Okay. And the next thing you need to look out for is your time frame of charts. You need to look at your long-term technicals of your stock, your ETF. What important levels are there to watch out for? Then you narrow it down into the short-term technicals, like how is the stock trading each day or each week? What are important day, week levels? After which you then put it all together. So that is your trading plan. And I'm just going to say it now that it's very important that you are aware what is your time frame of your trade. Because you want to sleep and put in an overnight trade, you should not be looking at a 5-minute chart or a 1-minute chart. You should be looking at a daily chart, hourly chart, or weekly chart, longer term. Okay? So again, we always zoom out and then zoom in. So this is an example of what I mean by putting it all together. Look at Starbucks. This is a 1-day chart, meaning each candle is a day. And we just look at some technical levels. So basically, when I look at this chart, one level I will be watching out for is 62.57. Possibly around this 56 region as well. And the fact that it gapped down probably has to do with something that happened on the big picture. Maybe the S&P also gapped down. This chart was taken in a different time frame as the SPY chart, so it's just purely for educational purposes, yeah? Then you zoom in on the 15-minute chart, and then you see that, oh, okay, these are the key levels from the past 2 days. Yesterday, today, this is Friday's low, and there is this range that's happening, and therefore you then put in your view. General picture, is it still going up? Maybe it might go up, and then I'll put in a stop limit order or a limit order here or here, depending on your view again. Okay. Or if you want to be really lazy, we've got Poe's chart list. So you can apply for this, and it will just give you overviews. So this does a bit of scanning for you. You put in technical levels, they'll tell you bullish, bearish. So again, these are certain tools that you can use alongside what I've just said to help you screen your stocks. Okay. So how then do you trade your US CFD? For, as I said, it is a DMA, right? Direct market access. So you can put in limit order, stop limit order, and a market order. What is the difference? A limit order is you put in an order, you want to buy it or sell it at that specific price. A market order, which is unique only to the US market, is to buy it or sell it at the current market price. So a lot of people actually like this because it's I think a transparency thing again. But my advice again is if you are not monitoring, you want to go to sleep at same hour, like say 11 p.m., you should mainly be focusing on the limit order and the stop limit order. And you can do this via our CFD Trader 2 platform. I'm not going to go into details again to how you can input all these order types. because CFD Trader 2 tutorial is another 1.5 hour webinar. But if you are our CFD client, please apply. Go to our website under trading platforms. It's free. It's got charting. You just need to apply. Okay. So back to our myths that I said before. You want to sleep normal hours. You are unfamiliar. You find that they're too expensive. And you think that you have a US account. You need a US based account. Not true. Okay? But certain things that are pertaining to CFD trading, you need to subscribe to a US live price. It's not an auto feed. You just go onto your poems. This is a web base, right? Poems.com.sg. You log in, you go to stocks, you look under the stocks new reward subscriptions, and subscribe for the non-professional user. It's totally free. If you are a professional user, that means you are more interested in day trading, then you can subscribe for the professional user, but I don't recommend that. Before you can trade the US market, you need to fill in this W8 BAN form, because you have to declare to the US government that you are not a US citizen, so that you don't have to pay taxes for your investments. Okay. Another thing, we have gone mobile. As Yuan Chao has said earlier on, we are on the iPad. We are also on the iPhone. So if you already have done your technical analysis, your homework, you should be able to put in alerts on your CFD Trader 2, and you can email the alerts to you. And then if you're at work, you can put in your stop limit order, your limit order, or even market order, not market order, stop limit order via your iPhone or your iPad.
Sorry to interrupt again. We have Mr. Chi who wants to know what's the difference between a pro subscription and a non-professional subscription for the US live prices.
That's a very good question, and I've asked my colleagues in the Poems department what's the difference. Basically, there's not much difference. It's just a lot more data, because I guess as a professional trader, you are looking at more market depth. Because in the US, they've got something called the level 2s, where it's not just looking at volume and number of people queuing to buy at certain bid and offers. So that might be what is in the professional subscription. Okay, so we do have certain promotions right now that you might want to remember. I was telling you about the chart list. If you are a frequent trader, you get the stock alert SMSs. So you are constantly aware of how the Dow Jones are doing because of the indices. You will have that market depth. You will have 3 months chart list, so it can help you to screen. And I just think that all these tools will really help you in your trade, to make your decision process, because it's all about, as you said, familiarity with the markets, right? And you've got to get yourself started some way or another, either by reading up the newspapers, or go to our website, or just get all these simple stock alert SMSs. I'm not going to talk about this, although I think it's important. I'm just going to go back to a little bit on our promotion. Let me find that slide. We currently have this US Play, and why I am focusing on it is because currently the US is bearish, and the main way that you can short the market is via CFDs. And we have listed ETFs as well. And every trade gets you one chance to win a trip to the US, to New York. And you get a half-day tour with Mike Gallagher of S&P Capital. And I think this is really, really exciting because these are professional traders and you will get to learn even more strategies like swing trading, second day trades. We get more in-depth knowledge about what is they call stocks in play, which is a bit, I've touched on a little bit on it, which is your keywords to look out for, which is why I also highly recommend that if you have Twitter, please follow us on Twitter because we are constantly updating data, be it on the US or on Singapore stocks. So this is the best way to get yourself familiarized with the different sectors, the different stocks. Okay, it's a bit of a short presentation, I know. Before you begin trading, please read all our info sheets, terms and conditions, go attend all our other seminars. It will help you with your US trades. You just put in a limit order depending on how your technicals tell you, and put in your stop limit order, which is your stop loss, and then go to sleep. The most important thing is really about looking at the longer term charts. Don't look at your 1 minute chart, don't look at your 5 minute chart. Look at 15, look at daily, hourly charts. And fundamental analysis isn't the biggest thing to look out for because the CFD trading is meant for shorter term. You've got your leverage element in there as well. And do sign up for our research reports via poems.com stocks research because our strategist comes up with US sector strategy reports as well, and they give recommendations, specific recommendations on what ETFs to look out for, what CFDs to look out for, and this comes out on a daily basis as well. So, are there any more questions? If you want to raise up your hand and just ask questions via your mic, do feel free to do so as well. I'm also taking questions via the chat box.
Thank you, Melissa, for the presentation. Just to add, the US market is the most liquid market in the world, and the volatility in the US market is unmatched. So if you are used to trading in the Singapore market, you might not be used to the volatility in the US market. So what I suggest is that if you are new to the US market, you might want to start small, get used to the market mechanics, then you can gradually move on from there.
Yeah, I agree with you, Chao, and that is also another reason why I have to emphasize again, looking at your charts, the time frame of the chart is very, very important. A lot of clients make the mistake of looking at the shorter term charts because simply it's more exciting. I know it's more exciting, but what I have learned over my trading is that if you look at longer term charts, you do not need to check on your charts every single day. For example, if you look at a weekly chart and then you zoom in on, that's for your longer term, and then you zoom in on your 1 hour chart to make the confirmation and your entry point, you just need to check once a day. Yeah, for example, like when you're home, you just want to check how the market is moving when it opens. The first 45 minutes is about price discovery, so maybe about 10, 11, you kind of know where the market is going, whether is it in your favor or not, whether to continue keeping your limit order in there or to put in a new limit order. So these are simple things that you can do, and once you put it in, just shut off the platform and just go to bed.
Just to add, another thing you should take note of when you are trading in specific counters is to actually keep abreast of the developments and of the company, and probably also take note the earnings releases, because it's not unusual for a counter to move 10 to 30% on the day of the earnings release.
Okay, I noticed that there is a question about forex risk. So yes, when you are trading in another currency, there is that FX risk, which is why when we recommend clients put in a certain sum. If they're going to trade the US market, just convert that whole amount at one shot, um, and that kind of acts as your trade management. Because, for example, if I'm going to change 5,000 US dollars, I'm not going to trade more than 5,000 US dollars. It's this mental sum that you have to do and manage your risk. Another question is about the earnings release dates in the calendar. Let me just go to this page. Unfortunately, no, there are no earnings release dates because by the sheer fact that there are, I think, over 5,000 US companies, so it's a little bit impossible to list out all the earnings. But what we do highlight is about the US market roundup, because sometimes it might say like which companies are going to release soon. Another month that I think, if I'm not wrong, we should look out for October period, because October is the earnings release season. Yuan, do you know any other websites?
For earnings release, you might want to check it out at Yahoo Finance. They actually do have US earnings calendar, which is updated every day.
And I'm not the Singapore Yahoo Finance, but the US Yahoo Finance, right? Okay, it refuses to go to the US site. Oh. Sorry, yeah, so another good website here that you can also look and see. Okay, so this is a really, really long report. As you can see, there are like over 5,000 listed. So this is one schedule that you probably want to look at. Okay, there's a question. If you want to long S&P 500 ETF, can we buy using a stocks trading account? Okay, CFD account is a tag-on, it's a child account. So you do have to fill in a CFD account form, account opening form, before you can do an ETF CFD trade or a CFD trade?
Just to add, you can actually trade the ETF on your stock account also if you are not interested in actually using your CFD account to trade the ETF. It's also available on your stock account.
Yes,
You can
that's
trade it
right.
on the stock exchange.
For ETFs, as in traditional ETFs, you can, if you have a stock account, you can already trade it. And ETFs are great because if you're not familiar with ETFs, exchange traded funds, they mimic a lot of indices. So back to my previous slide, US has tons and tons of ETFs that are, oh, it's not showing up. One is not showing up. Hang on, yeah. Yeah. So there are so many major asset classes ETFs. You've got your commodities. A lot of people love the gold ETF and some other sector ETFs as well. There are so many listed on our stock site. But of course, the thing about ETF CFDs is that you can short and you've got that leverage element. I hope that answers your question. Just to sum it all up, I guess a lot of people have fears when they're trading either a new product or a new market. But the same rules do apply in terms of technical analysis, which is why that part has to be very strong in terms of your foundation. It's the strategies that you put in play that are then important, and you have to tweak it according to your own trading style as well. Of course, for the US market, it has to do about the timing. So again, emphasis on looking at your time frames on your chart. You need to look at multiple time frames, and rule of thumb, zoom out, big picture, then you zoom in. Okay, Mr. Ng asked whether is there a best time to trade. Good question. I was mentioning earlier on that the first 45 minutes, around 45 minutes, is what we call price discovery. So for the US market, because it is so volatile with it, and they have pre-market trading as well, the first 45 minutes, prices can really move, and it's only after the first 30 to 45 minutes that it kind of settles down and you see a bit more direction. And when that happens, then you might want to trade, put in a trade. But if you are looking at bigger picture, longer time frames, again, this may not necessarily be a strategy that you want to look for. You might just want to concentrate on looking on your longer candles and just make your decisions accordingly.
The question on reverse ETFs, we do offer reverse ETFs, but currently we are not offering leverage ETFs. For the list of ETFs we are offering, you might want to check it out on our website, phillipcfd.com. It's listed on our products list.
The funny thing about the best time to trade, I do have a funny story about a client whom we've nicknamed Mr. Lunchtime because he realizes that when he's trading the US, he has to avoid lunchtime because his trades don't do well, and well, he wants to eat apparently. So again, it depends on what style is your trading, um, and whether how late you're willing to stay up. But if you want to sleep peacefully, don't stare at your chart. I have been guilty of doing so, and honestly, the longer you stare at your chart, it's not going to help. If you have a sound trading strategy where you have your stop loss, you will be fine. Alright, I think we will stay around for about another 5 more minutes to get more questions. So do ask us your questions. Oh, we have another question on ETFs. I was hoping my colleague on ETF colleague is here, but unfortunately she's not. Yuan Chao, do you have any examples on the inverse ETFs? Just bear with us for a while, Mr. Low, while we check up on that. In the meanwhile, are there any other questions? Unfortunately, I'm not for research, so I cannot give an outlook on the S&P 500 or the Dow Jones, simply because I do not want to get in trouble with MAS. But our research folks, our strategists are currently bearish on the S&P, bearish on the Dow Jones, bearish on the Nasdaq, simply because of the looming fiscal cliff, and a lot of investors are very nervous. So their recommendation for the near term is bullish for all, if that helps. Yes, bearish for all. So,
Sorry, just to correct myself, I think we do not have any inverse ETFs, but if you are looking at any inverse ETFs, right, you might want to look at those Direxon, those offered by Direxon, and those ProShares Ultra Short ETFs. I want to check out more on ETFs by attending our webinars conducted by our ETF colleagues. We also cover the risks and things you should look out for when trading an ETF.
so you can also go to our ETF website, phillipetf.com. So these are the top 5 traded. US is always at the top there. You can also sign up for their seminars. They also have their ETF screeners, which is, yeah, you can check via the asset class, the region, sector, if you have a particular manager that you want to check and then compare. So this is for the ETF side. If you want to hedge against forex risk, you will okay, again, when it comes to forex risk hedging, you need to be investing a lot in US dollars, and when I mean a lot, it's probably like a few $100,000 before I think it's significant enough to hedge your risk, your FX risk. Otherwise, if you change via Phillip CFD or Phillip Securities, our exchange rates are pretty good because we do have a futures entity, and the rates are much better than the bank. Which again, let me repeat what I've said before. If you intend to trade the US markets, our recommendation is that you decide how much you're willing to risk in total in terms of US dollars, and you change it all at one go so that you have, say, 5,000 US dollars in the US ledger under the CFD account. And that acts as a trade management tool as well, because in your mind, when you are making your calculations on how many shares to buy or sell, you already know that I have 5,000. I'm not going to over leverage, and these are the number of shares that I'm going to buy. Just in case people don't know, the minimum number of shares for the US is one share. It's not one lot, it's one share. Bianca, is there anything you want to add on how people can ease their mind when they're trading the US market?
I think the most important of all, just keep abreast of information on the company that you are trading on. Then usually when earnings release are released before market or after the market. So if it's released after market, there's nothing much you can do until the next trading day. But if it's released before market, then you might want to take note of it, because it would definitely affect the trading activity for that particular counter for the day.
Okay, it's already 7:25. If there are no more questions, well, if there are any more questions, you can always feel free to email it to us at cfd@phillip.com.sg. This webinar is recorded. Once we manage to figure out what's wrong with Windows Media Player and YouTube, it will be up on our YouTube channel and again on our website, where you can find our past webinars. It is on our website under Education, Seminar Webinars.
Earnings report on US stocks, unless I think the easiest way for most retail clients would be to actually maybe check it out on the Yahoo Finance website that we showed you earlier. Maybe Melissa can bring it out on the screen. I just take note of the date, then try to actually keep track of the earnings?
One webinar that I highly recommend that people to watch is this: how to take advantage of both the long and short side of the US markets. This was a joint webinar that we did with SMB, and he goes through a little bit more on the strategies on US markets, how you should have a trading plan, how you can long and short the US markets. But just a note of caution, Mike is a prop trader, which means he is concerned mainly on intraday. But certain things that we can still take away are strategy and why it is okay. You shouldn't be fearful of trading the US.
Question on the earnings release, there will not be any SMS alerts. So you have to actually keep track of the earnings release on your site.
Okay, we've got a very, very interesting question about using other online brokers that are based in the US. The main issue is because they are not based in Singapore, there might be some issues in terms of like customer service. We do have US dealers here that you can call up, ask them for their views. If there's something wrong with your computer, at least they have the charts. They can tell you what's going on, market sentiment. Another thing that I have heard is because you don't know them very, very well, if they shut down one day, they go bust, there is nobody physically here to help you recoup your money. MAS is that can't protect you because it's only when they open shop in Singapore that there's a rule under US that your funds are segregated, etc., etc. So these are the risks of opening with online brokers that you are not based in Singapore. Okay, another question about the earnings payout and affecting the stock price in terms of dividend payout. Let me just, these are a few questions together, so let me just answer one by one. Earnings, it will affect stock price to a certain extent because your analyst comes up with reports. Different analysts together, there is this average estimate on how the stocks should be doing, what is their dividend payout, what's expected. It's all about expectations, expectations, expectations. So if the company releases the news that is below expectation, that's a negative thing, right? That may affect the stock price to go down. Or if it's better than analyst estimate, the stock price may go up. If it's right smack at the analyst estimates, then that may not move at all. The stock may not move at all. So I'm just curious, how many people are already trying trading the US markets? Are there anybody in the audience who are trading the US or trying to trade the US? Oh, okay. So far only one person said he is trading. And his main complaint is about volatility. Uh, yeah, as I said, don't stare at your charts. Be very clear about your time frame. There is a lot of noise, especially the first 45 minutes when the market opens. Yeah, if you have a sound trading strategy, you shouldn't be too fearful. We've got an ETF. Yeah, it's true. There are a lot of when you're unfamiliar, you tend to want to look at broad markets like ETF. So do look for something that you are a bit more familiar, either in terms of brands or in terms of sectors. You may want to look for ETF for long term for sure. When it comes to shorting, however, then you have to use CFDs. But just to repeat, my research strategy team is bearish on all, so their recommendation is just to short the major indices. Okay, I guess that's all. No further questions.
Question whether dividend payout will actually affect the stock price. I think that applies for the US market as it is in the Singapore market. So before the payout, before the exit, the market will definitely factor in the dividend payout. Then after that, the market also adjusts for the dividend payout also in most circumstances.
Okay, so these are all our contact details. If you want to email us, follow us on Twitter, we are also on Facebook. We highly encourage all of you guys to take part, either tweeting to us or posting on our Facebook page. We want to build a community because it's only when we are, together, we share ideas, we get more comfortable with the product, get more comfortable with certain companies, and we I am organizing monthly gatherings so that we can all come together, share our views, etc. So the first gathering is going to be next Friday. You can come and join us. I'm trying to get the SMB people on as well. They will talk about the US for sure. If you have burning questions on strategies, etc., they're the best guys to look for. Uh, you can go to our page here again under seminars and webinars, is this one, the Wall Street Trading Foundation program Get Together. So do come and join us next Friday. Sorry, I've got a question about, okay, I think I've answered that question already. So yeah, education, seminar webinars, we have education videos. So earlier on, I was recommending people to come and scroll down webinars. Do watch this one, especially if you are still, wondering here and there whether should I or should I not invest in US markets. Here's a webinar that we did with Mike that tells you why you should, because its advantages. The volatility may be scary to some, but it is because of that volatility where you can really find a lot of opportunities, both long and short. With regards to the Wall Street gathering, it is open for all. Of course, if you have attended the previous training course, you are more familiar with the style. But what I've explained to you earlier on is pretty much the way that they trade. They always look at big picture, which is your SPY, and then they will track down by stock. And they are intraday players, so the way they strategize is slightly different from what I told you earlier on. But in terms of knowledge, yes, come discuss. We're going to talk about US trading. We're also going to talk a little bit about what's going on in the global economy. I'm sure all of you guys are very curious as to how this fiscal cliff is going to affect all of us now that who is out, C is in, Obama, etc. I think it'll be fun. We are going to do this every month. Yeah, so do join us. It's for everyone. It's open for all. For those who are Chinese speakers or people who are Chinese speakers, we also have the US one in Chinese about how it affects the Singapore market as well. Okay?
Based on the dividends, you might want to check out either Reuters, Bloomberg, or Yahoo Finance. They should usually have a dividends calendar for the respective markets.
Okay. If there are no further questions, we are going to end today's session. I'd like to thank all of you for joining me today. I hope you have some takeaways. And there is an exit survey. Please do me a huge favor by filling in that survey. Then we know how we have done, how we can tweak this even further, and to help you and others on their trades. So thank you, have a good evening, and enjoy your weekend.